Traders, Brian DeMoe with DayTradingFutures.net doing the second weekly video for the month of January 2014. Now, with the Friday's release of the payroll or U.S. payrolls figures well under forecast, we saw a huge spike in activity which really set up a lot of good trades for us. And particularly I'm going to be covering four instruments, going over what I think are potential trades as well as what's in the news for those particular currencies. And we're not going to be doing gold or oil at all this week. If you have a request for an instrument that I'm not covering, please feel free to contact us on our website. So, moving forward, let's talk about the Australian futures. So Friday we just saw a huge boost. So basically, the reasons why we saw this is a lot of investors want to jump in on the Australian currency pair cross with the US dollar, just for the mere fact that it is at a pretty low level right now, and has been dipping down since early November at the top of head and shoulders pattern that we experienced. So I really have been, I do believe that the investors are looking at a retracement back up at least to the 92, 91.5 price level. So in terms of the futures, for us, because there's about a 40 to 60 point difference between the actual forex of the Australian cross with the US dollar and the actual futures. So for us, we're looking at a potential, short, medium term target of around 0.914. I don't think it's going to get any higher than that. The RBA is certainly not keen on a higher currency. They really do want their currency down to the 0.85 levels. I have here drawn a potential holdback from the huge rally that we experienced on Friday, and that is possible. It may not go all the way down to the support level at 89.15, but if it does, I would take that as a long setup, targeting for sure the 0.8997 area. To go short here would be a pretty good trade, just keeping your stops just above this line of resistance at 89.63. I currently am short a couple contracts at this level, keeping my investment small at this point. We have this line of resistance is holding right now. It's a pretty tough line of resistance as well, but we do have this huge bullish engulfing candle that that almost engulfs the entire last 3 or 4 days worth of data. So this I may well get stopped out, and that's fine, but in my views this is a good risk reward as long as I keep my stop pretty tight, which I have. So we may dip down, and I would sell my short position or buy to cover right around this area at 89.15 or just above it, and then I would jump into a long position, even though I've said that I wouldn't in the previous video, with that release of that information and the fact that the Feds are probably not going to do any kind of tapering this month at all, whether it's measured tapering or obviously ending QE. I just don't see that happening. I think they're going to hold off at least until the next month for any kind of measured tapering. So I would jump long at this point. I think the risk reward at this level is good, and targeting 89.97. If we continue past this line of resistance, I would jump in a long position from this point here, targeting first 89.97 and then waiting for a pullback. Now, once we get past this point of resistance up here, this is kind of no man's land in my opinion. We really got to have some positive numbers continuously for the Australian dollar, and then continuous negative numbers for the US dollar. And that to me is just playing a lot. So if we get above this line, I'm expecting that we'll have some consolidation, and at that point I will only be shorting the bounces. So that's the Australian currency. Again, it's possible that we have just a pullback correction down to this level, and then a bounce immediately back up to the 8997, but I do feel that this area is certain to come into play with this upcoming week. So for the Australian dollar, we have the home loans being released on Sunday at 6:30 p.m. Central Standard Time. And then in terms of following news for the US dollar, we have on Monday the federal budget balance, which is coming out at 1 o'clock p.m. Central Standard Time. Keep an eye on those particular release of data, and we'll see what happens. Next on the list, we're going to cover the British pound. Now, the British pound has a really busy week in terms of news. We have a huge amount of data coming out on Tuesday the 14th. Following that, there's a lot of US data coming out on Wednesday, as well as the RICS house price balance for the pound currency, and that's at about 6 o'clock p.m. Central Standard Time. More data on the pound Friday, January 17th, starting at 3:30 in the morning Central Standard Time. So a lot of activity for the pound coming out next week in terms of news. So definitely keep an eye on all of that. We'll keep the economic calendars posted on our website and a link to interactive economic calendars for both investing.com and also FX Street. So looking at this chart here, this is a 4-hour. This is a line of support, and I think this is a great long opportunity. We will certainly bypass this or pass this point of resistance after a retracement back down. So what I'm thinking is going to happen is as long as the news is not negative, there's just a lot of potential positive outlooks or forecasts for the British government. So definitely at this level I would go long, setting my stop just below this candle or at the line of resistance or just below the resistance, depending on how much you want to limit there. It would have been nice if you jumped in at this low level here. However, still getting in at this point is still a great risk reward in my opinion. So jumping in a long position, targeting just around this area at the 16572. What we'll probably see is some kind of retracement back down to, I think, in this line here, which is a little minor line of support resistance that can come into play. And this is going to skyrocket, I believe. I think that I've read on a couple websites, they're all bullish on the bias. However, they're looking at the first level of resistance in the medium to long term is 16750, and then ultimately 17. So yeah, definitely some bullish outcomes or bullish bias for the pound. And I think this right now is a really good trade setup to go long. I'm definitely jumping in on this come Sunday opening markets. So that covers the pound. Now we're going to take a look at the yen futures. Now the yen, biased on the yen is bullish, or excuse me, bearish, extremely bearish. But I think there's more room for the US dollar slash JPY currency pair for it to go down a little further. So I'm thinking that I'm thinking that what we'll see is a break above this line of resistance at 9627, and more than likely targeting the 9675. So going long here, in my opinion, is not a good idea, just because the yen is destined to continue down, and it will break this line of support that's held for several occasions. I would wait until, if we do continue past this line of support here at 9627, I would wait until we get to any one of these levels. As soon as it looks like it's going to break down, at that point I'd go short. So that's if we continue past this point of resistance. If not, then opening market, you can just kind of wait to see what it's going to do, if it's going to rise a little longer, and jumping into a short trade at any area here, I think is fairly a good idea. Setting your stops just above this level of resistance. My first target would be at the 9562 area. Second target, 949. So I think this is a really good trade setup. Again, Friday's rally, due to the negative news on the payroll, gave us a lot of good short setups especially for these weaker currencies, and the yen is certainly one of those. So yeah, so that's what we see here. In the news we have Monday, the current accounts index. That's really all related directly to the Japanese economy that's coming out in terms of news-wise this week. So Monday, and let me check the time for you on that. There's three things happening on Monday for the Japanese economy data release, but the one that's really has the most impact is that current account, and that is at 5:50 p.m. Central Standard Time. So great short opportunity here with the yen futures. Now we're going to finally look at the New Zealand futures. So here I have two scenarios drawn out for you on the 4-hour chart. I am leaning more towards a continuation back up to this line of resistance at 83.89. Biased on the New Zealand dollar currency is bullish. Long-term expectations for the New Zealand economy is just growth, and it's supposed to be one of the hottest currency to trade for the bulls for 2014. Anytime you go short with this currency, you just want to make sure you keep an eye on the news and on your charts, and keep your stops, in place. Always trade with your stops, anyways. So for what we're looking at here, this is a pretty strong level of resistance, but I don't think it's going to hold. I think we're going to have a continuation up. So if you weren't long New Zealand, you maybe take some profits here. If we have a little pullback, jump back in. For the long scenario, going long at this point, I'd hold off, wait to see what happens with this line of resistance at 82.78. I'd want to jump in if it looks like it's breaking above that. Stochastics are showing that we're not even near the oversold level. So I really do think that that we're going to break this line of resistance. So if we do, which I'm pretty sure we will, a jump in long. First target would be this second line of resistance, which is minor. It's a minor line of resistance. It's not really a big concern of mine, but it maybe not take off or take any profits here, but at least keep an eye on your charts. And then you're going to want to target a conservative long target at 83.89. It's possible that we spike above it, just like we see back here at 85.11 was the high. First level or first target of profits is right at 83.89. Second could be the highs around 85.11 or 84.92 area. So that's what I'm looking for. It's quite possible that we just continue our rally in the New Zealand currency or the futures. So first target, second target, and with a keen eye on the charts once we get to this price range here to make sure that this level of resistance doesn't hold. New Zealand has news coming out on Monday. The business confidence, that's at 3 o'clock p.m. There's two other sections of news coming out 45 minutes later, low impacting. So really, that's all we have for the New Zealand dollar. Keeping an eye on that on Monday, and but I do think that we'll have a continuation here. So I think a long opportunity is safe. And then as soon as it looks like it's rejected by this line of resistance, or possibly, unlikely, but possibly this line of resistance, then I would jump into a short, but with tight stops. Again, New Zealand dollar could pop up any time and break this line of consolidation, or this sideways channel that we've been traveling. So that covers it for this weekly's video. I hope everybody had a great week and took advantage of the rallies that we've had, especially with the Australian currency. Enjoy the rest of your weekend. See you next week.